Domestic versus Cross-Border Mergers and Acquisitions, a Financial Performance Comparison of German Companies by Kimberly, Ignacia, Sihombing. Abstract. This study examines the mergers and acquisitions, or M&As, of German firms, comparing the performance of cross-border and domestic transactions. By analyzing the return on equity, or ROE, and return on assets, or ROA, the study finds that ROE is a more effective metric for distinguishing the performance of domestic and cross-border firms. The results indicate that cross-border M&As generate higher ROE compared to domestic M&As, providing empirical evidence that cross-border transactions yield superior returns. Now we're moving on to the background. Cross-border mergers and acquisitions, or M&A, are key elements of foreign direct investment, or FDI, in developed economies, offering advantages such as market access and enhanced expertise. While early research, such as Revenkast and Scherer, and Meeks as well, suggested that M&As negatively impacted productivity. More recent studies, however, present a more optimistic outlook. For instance, we can look at Gugler et al., which found that M&A, on average, led to significant profit increases during the 1990s. Cross-border M&As are particularly valuable for gaining access to new markets and acquiring diverse skills, providing mutual benefits for both acquiring and target firms. This study itself focuses on Germany's financial landscape and its role on driving cross-border M&As, both domestically and internationally. Now we are moving on to the objectives of this thesis or this paper. This paper examines whether cross-border mergers and acquisitions, or M&As, by German companies generate higher market value for acquirers compared to domestic M&As. It uses the performance of acquisitions, measured by return on assets and return on equity, as dependent variables to assess the profitability and effectiveness of these transactions. These metrics are employed to analyze the impact of M&A activities on overall returns. Now we are returning to the literature review of this paper. First off, we will start for mergers and acquisitions and their definitions. Mergers and acquisitions, or M&A, are crucial opportunities for firms to gain valuable knowledge, offering insights into both initial analysis and post-acquisition integration across domestic and international contexts. This is from Finkelstein and Hallebein, 2002. Firms also leverage prior M&A experience to streamline future transactions and integration processes, creating a pattern of repetitive momentum. The definition of M&As varies among scholars. Horn and John, 2004, describe merger as a legal consolidation into one entity, while Georges, 2011, distinguishes mergers as the fusion of multiple entities. This is where they differ, hence differing from acquisitions where a larger company absorbs a smaller one. However, Kant 2011 views mergers as operating new entities, while Durga, Rao, and Kumar from 2013 define M&As more broadly to include takeovers and also to ownership structures. Now we're moving on to the literature review part of domestic mergers and acquisitions, or domestic M&As, which are complex corporate transactions that take place within a single country. So it is in the country itself, unlike cross-border M&As, which span multiple national jurisdictions or multiple countries. Cross-border transactions involve additional complexities such as cultural, institutional, logistic challenges, and so many more. While domestic acquisitions occur in more homogeneous environments or similar environments. Stibel and Trax from 2011 suggest that domestic M&As can still offer growth and productivity benefits. However, Sudarsanam highlights short-term gains for acquiring entities, though some with negative returns around the announcement date. Over the long term, UK firms showed positive returns, but these were not significantly higher than the returns achieved without M&As. Now we're moving on to the literature review part of cross-border and M&As, or cross-border mergers and acquisitions. Vermeulen and Barkema from 2001 highlight the complexity of cross-border mergers and acquisitions compared to domestic ones, with firms often repeating successful behaviors to minimize risk. Nguyen from 2019 and Nguyen and Vu from 2021 note that economic uncertainties influence FDI inflows, or foreign direct investment inflows, with global factors increasing them. Cash payments are preferred in M&As due to the risk with stock payments. Cross-border M&As make up 80% of global FDI in 2007, according to Zhu and Jog from 2012, driving growth and competitive advantages through cost differences and technological transfer, from Stibel and Trucks 2011. Now we are moving on to the research methodology of this paper. Guerra and Thompson from 2004 found a negative impact of M&As in Denmark, with a more significant decline in target firm performance for cross-border M&As. However, Gugler et al. From 2003 observed no significant profit difference between cross-border M&As and domestic M&As. This thesis or paper hypothesizes that returns from German cross-border and domestic M&As show little difference. While acquisitions don't always lead to above-average profits, Hit et al. From 1998 suggests that the value is created when target firms complement acquirers' assets, fostering synergy. The second hypothesis proposes substantial differences in returns between cross-border and domestic M&As. To assess financial performance, a combination of accounting and market-based measures such as ROA or return on assets, ROE or return on equity, Tobin's Q, and market return is recommended by Gentry and Shen 2010, with Weber in 1996 highlighting ROA or return on assets as a favorable measure. Now we're moving on to the data selection. This paper or thesis uses German-specific data from 2018 to 2022, sourced from the Orbis database. The dataset includes mergers and acquisitions transactions with the following criteria: announcement dates between January 1st, 2018 and December 31st, 2022, completed deals by December 31st, 2022, acquired base in Germany, and publicly listed acquired companies. The initial dataset contained 7,315 mergers and acquisitions transactions. Further data transaction focus on deal values, characteristics, and accounting details, all gathered from the Orbis database. Now we are moving on to the results and discussion of this paper. The study finds that cross-border mergers and acquisitions, or M&As, by German companies generate higher market value for acquirers compared to domestic M&As, supporting the hypothesis that cross-border transactions yield superior returns. The higher the return on equity in cross-border firms likely stems from advantages such as global market access, diversified revenue streams, and operational efficiencies. The study also discusses factors influencing financial performance, including geography, legal frameworks, and economic policies. Research on mergers and acquisitions shows mixed results on profitability, with some studies suggesting no improvement in return on equity, and others indicating positive post-M&A's performance. Cross-border mergers and acquisitions are rising globally, especially in developing regions, and contribute to corporate restructuring, asset relocation, and operational efficiency. Though their value has been affected by global economic downturns, factors like private equity involvement, firm geography, and the legal environment further influence M&A outcomes, with cross-border deals in emerging markets showing substantial gains for shareholders. Now we conclude this paper with the conclusion of cross-border mergers and acquisitions that are more beneficial in terms of long-term financial performance than domestic. But the outcomes depend on various factors, including the strategic fit between acquiring and targeting firms, and the legal institutional frameworks, and of course the economic conditions. The findings highlight the importance of considering these factors when evaluating mergers and acquisition strategies, especially for companies involved in international acquisitions. That is all for this paper and the conclusion. Thank you so much for chiming in into this video and for allowing us to present the paper. Good day.